Good afternoon. This is Melissa with thestockswoosh.com. Welcome today to a webinar on support and resistance in trading. Welcome. If you have any questions about this webinar, please feel free to contact me at Melissa at thestockswoosh.com. And you can go to my YouTube website to watch any videos I have there at the Stock Swoosh. So what is today about? Today is about looking at a sophisticated way to read support and resistance in trading. This is an important class today. Support and resistance can be read in many different ways. 5 or 10 or 20 different people could line up in a room and all of them would look at support and resistance differently. Why? Why? Because people think that support and resistance is an easy read. Most people assume that it is not as important as it is. Most people do not take a lot of time to focus on the complexities of it. Support and resistance is complex, and there is a sophisticated way to read it. If you can learn how to read support and resistance properly, you will have an edge in your trading. Why? Because a lot of people think it's an easy read and it's not. It just isn't. It's complex. Can you grasp it? Yes. Yes, you can. You can, but you need to do that in order to get an edge in your trading. Anything you can do to get an edge in your trading is going to help you make money. We all know that. Everyone's always searching. What's the edge? Well, there's lots of different edges that people have. However, the bottom line is, if you can take something like support and resistance and break it down in a way that you can read it intellectually, that in and of itself is going to give you an edge in your trading. Is it possible to make money trading? Yes. Yes, it is possible. It is possible as a day trader, a swing trader, a core trader to make money trading. You can learn a system to do it. You can learn a system that works consistently. You can learn a system that works consistently over time as well. So just remember, do not drown and daydream thinking that this is something that you're never going to get, this trading thing. You can get it. You can get it. It's 100% possible. You just have to learn the right tools and information to make it happen. That's all. It's about taking the right action to get the results. Here's an example of MM. This is a trade I did the other day. This was just last week. And you've got to take the action. The action in this trade was shorting the stock in order to make money on the day in this. This was a beautiful, beautiful, beautiful short trade and a great gap. And you've got to take the action to get this at the right price to get the move down and get out at the right price. So put your thinking cap on and get to work. Look at this guy here. He is ready to get to work. He's got his glasses on. He's focusing on you. He's studying. He wants to get it right. He is serious. He's a serious investor here, ready to put his thinking cap on and get to work. So find a more intelligent way to read charts. Learn how to read charts from someone like me who reads them in a sophisticated manner. Learn from someone like me who can teach you beyond the simplistic way of reading charts and support and resistance levels. And that's what we're going to talk about today. So is support and resistance a strategy? No. 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 Absolutely not. This is not a reason to trade a stock symbol on the day. In fact, it's a misnomer that people think that it's a strategy and it isn't. Why, you ask yourself? I've heard that people do this. Are they incorrect? Does it not work? Why? The answer is no, it doesn't work. It doesn't work as a strategy. Support and resistance, shorting tops and picking bottoms and buying bottoms is not a strategy. If you don't have a strategy and just want to buy every support area and short every rally, you will not consistently make money over the long haul. Why? Well, the answer is very, very simple. Because stocks gap. Stocks gap. That's why support and resistance isn't a strategy, and in fact is an incorrect strategy, and in fact is if you play support and resistance as a strategy, you're going to lose in the end. Why? Because stocks gap. The very fact that stocks gap is the reason why support and resistance isn't a strategy. This is major stuff here. All right, people. Stocks gap and can gap big in either direction. So not knowing how to read support and resistance can trap you in trades that go against you because of the gap. Just buying dips and shorting rallies is not enough to make money. The key to making money trading is learning a good strategy to trade. Also learning how to read support and resistance in a sophisticated manner. Trading gaps is a very, very, very profitable strategy if you know how to trade them. But you got to trade the gap as a strategy, not the support and the resistance. That isn't the strategy. I teach a system It's a 26-point rating system on how to find the stock symbol to trade each day. So that's how I know what I'm picking to trade. That's what I look at to determine what I'm trading on the gap that day to take my trade. And the reason why gaps are so important, I could go on and on and on. I could talk for days and days and weeks, to be honest. I could show you 10,000 chart examples and find a million more. All of them kept snagging it. I have them. I own them now. But the point is, here's one reason why. This was a gap that happened. This was back in January. You can look at this, you can tell that it gapped to support. Nobody's going to argue that this is support here. It is. But that's not how I played the gap. That's not how I read it. I read this as resistance because of the fact that it gapped to support. I say to myself, okay, it did that, but the fact is this is a gap. This is a gap now. And I'm reading the gap, and the gap rate's high, and it's a good gap, and it's a quality gap. So I'm looking to short this stock on the day, not buy this here, even though it gapped to support. I see what you're seeing, but I'm seeing it differently. And this is where you got to get with your head. This is why this is all important. And if you took this trade and bought it here and you got stopped out, and you tried to buy it down here at the next support area, you would have gotten stopped out. You can't just keep buying when something's running on the way down. This was a short this day. And that's how I played it, and it was huge. All right. And do you see why buying support doesn't work? It just doesn't work. This chart is damaged now because of this gap. And the reality is that this is a sophisticated way to read this. And it's important to read the gap because that's what's going to tell you what's really happening here and why you can't buy this support. Here's another great example, the importance of gap analysis. This is HA. This gapped to the 200 period moving average daily chart. You can tell that this 200 period moving average is the support area. I'm not going to argue with you that it's not. But I'm not buying it on this day because of the gap. This isn't a buy. Some people bought it here. This was a rally up to resistance before it came in and you did the short. And then the play in this in the day is red. It's bearish. They're selling. This was the momentum move. The way to go is down, not up on this, despite the fact it gapped to support. You can't look at this as a buy. This is not a buy. Once again, buying support isn't the strategy. The strategy is the gap. You can't buy support on this day to play it long to make any money. The momentum's down. And actually went to the target. Look, beautiful. And then went to the next target on the continuation gap. These things often follow through. And it's following through today. This is a beautiful trade. Really nice. Just so nice. So the importance of gap analysis, here's a chart of Netflix. I could go on and talk about this chart many times over too. Netflix, you could have played long on the rally up to $300. You could have played every bullish gap all the way up. You could have shorted every bearish gap all the way down. And you could have bought this next gap now when the stop has corrected itself that happened just in the last month. This gap, although huge, was a corrective gap. It's what I call a corrective gap where it's fixed the chart, okay? It's like somebody is sick and all of a sudden they get better. They're fixed. This chart is fixed today. Even though the gap was huge, this was a bullish gap that was corrected the chart and it was a buy. And if you bought this here, you got paid. This ran up. Look how it ran up since this gap. And people will look at this and say, wow, it was a big gap, but it was a buy because it corrected the chart. Again, have to read what's happening here with the support and the resistance, right? Now, this is why you can't pick the bottoms in here with this. How would you have known ever when this is going to bottom out? You're not buying into any of these dips because the chart is on the way down. You're playing the gap. And here was the gap that corrected the chart that you want to play. This one here didn't correct it. This was a bullish gap. I'm not going to argue with you that it wasn't, but it didn't correct the chart. This one did. So the importance of reading them is to know when to get in a trade, which direction to take the trade, and the support and resistance that's in this chart is going to help you with that. That's how you're going to read it, but it's not the strategy. The strategy is the gap, and you're using the support and resistance to help you, not to make the decision for the stock in reference to picking bottoms, like saying to yourself, oh, this is support here, I'm going to buy it. Oh, this is a support here, I'm going to buy it. You know, this could have gapped down all the way under here. Nobody knew this was going to happen until it did. For all we know, the earnings could have come out and could have gone all the way under here. You don't know. If you took Netflix and shorted it on the first bearish gap down up here, Look how much you got paid. This was up around 260 some bucks. And if you held it all the way down in here, this is a huge play that you could have made a lot of money in a year. It dropped off the face of a cliff, $200. And do you see why you can't buy this? This was support. This was support here, actually, the 200. If you bought in this here, look what happened. It gapped down. If you bought in this here, look what happened. It fell off a cliff. If you bought in it this here, picking a bottom, it gapped down again. Every time you're underwater. This is why you cannot buy support as a strategy. You cannot buy support as a strategy. Don't do it. Do not do it. Look, don't do it. It gapped down even here again. Look, you even thought this was recovering here. This chart hadn't fixed itself despite this rally. No. All right? Here's when you're buying it, when it's absolutely fixed itself. And how are you going to know that? You're going to learn from me and take my class to learn these things, to learn how to rate them, to see when they rate high, to be able to buy them or short them. Remember, the seduction of tops and bottoms is a seduction, and that's all it is. It's not a strategy. It's a seduction. It's a seduction. It's trying to pull and lure you in. Ooh, seducing you. Seducing you, making you think you're getting some kind of bargain or some kind of deal, buying something low and selling something high. It makes sense, but it's not a strategy. You're not going to use support and resistance that way. How are you going to use it? We're going to talk about it today. But you can't pick tops and bottoms. That's the point I'm trying to make. What is a cheap price? A zero, 1 penny, 2 cents, that's a cheap price. And you shouldn't be buying anything if it's only worth 2 cents because it's about near bankruptcy. The point is nothing's cheap. Cheap is cheap. Cheap is zero. When it's at 1 cent, buy it. You can't pick bottoms. Price is what matters and nothing else matters. You've got to use your head. So what is a refined way to use support and resistance? Use support and resistance to assist you in your entries and exits. Use it in your plays. Use it to help you make money on the day with adds and reductions in trades. This is how an intellectual, sophisticated chart reader will use support and resistance in a way to help them make money and make more money and to take their plays not as a strategy. This was AFFY. I actually played this today. I actually shorted it. But this is a great example. When I saw this chart this morning, I said, wow, look at this. Look at all the people that bought in here that picked this bottom. They thought this was a fantastic bottom. Look at this. This is, oh my gosh, this is a huge support area, everybody said in the world here. I would never, never, never have bought this. I was looking to short this gap this day. The bottom line is it didn't work out as a short in this day. I never played it. It failed on the day. Never set up right in the morning, which I can tell by 9:45 if they're going to work or not. The point was it didn't work. I never shorted it, but I didn't buy it either. Why? Because it was a bearish gap. It was a bearish gap and the chart hadn't fixed itself despite the size of this bar. In fact, you can look at the bar. It just was a rally back to resistance. You can tell. Woo! Went right back up to resistance and held itself and never went over it. In fact, all the trading that happened in here never went over it, you could tell. And people bought in here thinking they were getting it on the cheap too. And look at what happened to everybody today. The stock, people that bought here $11, people that bought here at $16, the stock got down today to $2.75. Ran down to $2.34. These people got crushed. This is not support anymore. You cannot buy this way. I know it's support and it looks great, and that's all fine and dandy, but you can't buy this here, all right? The day it gaps down, I'm looking to do something different. It doesn't work. That doesn't mean I flip it. That's not the proper way to trade. So here's a better example. You can see how this thing was crushed on this gap. Just because it didn't work right in the day doesn't mean the chart's not lower. It is. The chart's been lower. There's a problem here with this thing. You could have told right back here on the 14th. And then if you didn't know that for sure, you knew today. Look at how damaged this thing was today. It was a gutsy thing to do to short this today. I made money on it. Of course, it's not going to run $2. This thing is down to $2. Where's it going to go? Went down to $2.34 was the low. But the fact is it had a nice play in it. A nice play in it, and it couldn't break over the high of the day. Here was another wonderful gap. This was pay. This is a great example of support and resistance too. This was a huge, huge gap down. And I watched it and I said, I love this gap. You know what? It is really down far though. I don't know how we're going to get this thing today, but I watched it and watched it and watched it, and lo and behold, we got it. So the stock opened. What I said I wanted to do in the day, how did I want it to set up in the open? What is the perfect entry? Show immediate weakness. Show immediate weakness. I didn't even want to see a rally. It's exactly what I said to the people in my trading room. You know what happened? Held. Dropped. Got in right here. This could not have set up more perfectly. This just popped people out. Boom. In. This was a beautiful 1 minute play and a great example of resistance, and I'm going to show you what I mean right here. The stock opened and went up 1 bar in 60 seconds to an exact level of resistance. The top of this bar is 2085. The top of this bar is 2087. Do you know what the top of this bar over here is? 2088. It's resistance, resistance. It never went over it. It went pop, hold, go. We never went over this resistance area here. This was perfect. Perfect. The entry time was 9:33 is the correct entry. The price was 20.35. The stop was over 20.62 was 27 cents. But pay runs and runs. It can run $3, $4 on the day. So it's worth the risk to reward, and it pays. I'm usually looking to 3 to 4 to 5 on risk to rewards. I'd like to see 10 or more. I want to see the possibility of 10 or more. They may only work for 3 or 4, but I'm getting in it with the possibility of 10 or more. In an ideal world, 8 to 10 I want to see. The target on this was $18. It got there. It actually went a little bit under it, but you got to be out by 18 because that is the target. And the real target on this overall chart is $16. So if you took 1,500 shares on the entry and held it to the target all day, it got there at 3 o'clock, you made $3,500. And even if you didn't want to take this much, if you wanted to take half this, you would have made $1,700 in one play in one day. 8.5 times a risk. This is how you have to trade. How do you know it's going to work? A huge, huge, huge gap down. And you grab it at the right price, and you talk about conviction. Talk about conviction, knowing how to trade. This is how you're going to use support and resistance to play to get in and to get out. All right? And then you're also going to use it for add and reduces. And here we have it again. So you're in the trade. You like it. It's not doing anything wrong. You're waiting, waiting, waiting. You're waiting for it to go. You're loving this thing. You have 100% conviction. What are you going to do? You're going to take more. You're going to take more when it starts to set up a new, brand new area that you're loving. When it does what? Tries to go higher and can't do it, tries to go higher and can't do it, tries to go higher and can't do it, can't do it, can't do it, can't do it. It's setting a new resistance area today. You add it, you're shorting, you're in more. You double your position. And people are looking at this and saying it's going to flip. It's not going to flip. No, this isn't going to flip. We know it's not going to flip by now. It's way after 10 o'clock. There's 100 reasons it's not going to flip. The gap rated high in my 26-point radius system. It's not doing anything wrong. It's waiting to go. This thing is damaged goods. Nobody wants it. And you can tell there's no buying in here. This isn't buying. Where's the buying? None. Just like the market right now. There hasn't been buying in the market for the last 2 months, and I've been calling the market bearish. And look at how we closed today. You know, there wasn't any buying coming in the Qs. The buying was in the SPY, but not the Qs. Read what's happening with the direction, with the price. Read the momentum. And you should be all in here. You should be all in here. You should be holding this thing. There's not doing anything wrong. So with the ad, you can double your position and actually risk no money. Stops over 2008. With the ad, you double your price. You take 3,000 shares instead of 1,500. You cost average in. You actually are risking nothing, okay? Or you could take another whole risk of $400 if you want to still keep the risk. But if you added to this trade and risked no money on it and held it to the target, you would have made over $6 grand. If you still took the original risk and added even more, if you wanted to take then an extra 1,500 and take 4,500 shares, you could have risked the real 400 that you had on the day, and then you would have made even more money on this. You would have made another $3,500. You would have made almost $10,000. Like $9,700 in one play. One play. One play. One good gap like this. Do you see why it's so important to learn how to do this? This is the way that you got to learn how to trade. I mean, this is where the money is. Become an intellectual to make money, to make real money. I'm talking about serious money here. I'm not talking about peanuts. I'm talking about learning how to use support and resistance and learning how to read gaps to make some real money. You can do it. People are doing it. People are doing it. I am doing it. This stuff is real. The money is real. You can make in the market if you learn how. I teach a class on a 26-point checklist to success on how to pick the right symbol to trade on the day. It's called the Golden Gap Strategy. The 26 points in the Golden Gap course are all based on the daily chart of a stock. The points use math and science in conjunction with technical analysis to analyze the price patterns to choose which stock symbol and gap to trade in the day. 26 points is a lot of things to look at to rate a stock. It is a very detailed system. And this system is cutting edge. It is a cutting edge system. It is a detailed system. It is a focused system. It is an intellectual system. So learn how to trade gaps. Learn how to intelligently read support or resistance. Learn a strategy that offers momentum moves in stocks each day. Learn a strategy that offers consistent profits. And learn how to pick which symbol to trade. The Golden Gap strategy and my Golden Gap course is a cutting-edge class. It uses your brain. You have to use your brain. But if you want to make a lot of money in the market, you're going to have to use your brain. You're putting your own money at risk in the market. You got to know what you're doing. You got to know what you're doing, and you have to have an edge. So learning how to properly read support and resistance will give you an edge in your trading. If you can learn this, you will press the buttons without hesitation when the time is right. Boom. In pay, $9.33, you're in. Drops to $2.50. If you want to produce consistent results in the market, you need something to give you an edge in your trading. Having a detailed focus system and a strategy like the Golden Gap 26 points gives you an edge. And this will help you make money trading every day or every day you trade. You know, you're not going to get stuff that runs $2, $3, $4 every day. Okay, you're just not, but you're going to get it enough to make money. So it's about having the conviction, having your eye on the ball, having your eye on the stock, on the correct symbol, and reading the support and resistance in the right way. Having your eye reading the support and resistance in the chart in the right direction. And how can you learn to do that? From me. From taking my class. It's called the Golden Gap course. It's a professional bearish gap system. The dates of the class are March 9th and 10th from 9 a.m. to 5 p.m. Eastern Time. The cost is $15.99. If you are interested in this class, please contact me at melissa@thestockswoosh.com. And I'm running a special offer for Online Trader Central webinar attendees who are here tonight. You can take the Golden Gap class on March 9th and 10th, and you're going to actually get 2 classes for free. The Trading Psychology class on Wealth Manifestation, you will get with the same price with the Golden Gap class. So if you sign up for the Golden Gap course, it's $15.99. You're going to get the Wealth Manifestation class for free. For free. It's normally $350. So it's actually a great combination package. And I do let people retake my Gap class as many times as they need to after the first course if they want to redo that for free as well. So it's 2 classes for the price of 1. The Wealth Manifestation class is about trading psychology and how to think and process things in reference to money. It is a fantastic class. And if you're interested in references on this or my Golden Gap class, please contact me, people who have taken my class. Remember, winter is a great season to take a class. You're at home, it's cold. This is the time to study. Remember, you can do it. Also, having the support of a trading room helps. I run a live trading room every day. If you'd like more information on that or to join my trading room, please contact me. The room is open every day from 8 a.m. to noon. And that's it. Make the money in the morning, book it, and stop. The room membership fee for students, if they take the Golden Gap class, is $200 a month. And for non-students, it's $250. If you're interested in anything I said tonight, please contact me at melissa@thestockswoosh.com. Thank you so much for coming. I appreciate all of your support. And have a wonderful evening.